This is Matthew Cratter from Trader University, and today I want to answer the question, why did Bitcoin crash in 2017? If you're interested in learning how to make money in both bull and bear markets, as well as seeing what I'm investing in or trading like Bitcoin, be sure to hit that subscribe button. So we had a massive run up in Bitcoin in 2017. Now, we know we have these halvings every 4 years in Bitcoin when the miner subsidy gets cut in half. The last one that happened before the big run up was in July of 2016, and we saw a very similar pattern to what we're seeing play out in 2020, where right after the halving was approximately call it here, right about here in the chart, and we had kind of a sideways period. Nothing too spectacular. And then within call it 12 to 18 months, we had a giant run up in Bitcoin that peaked in December, near the end of December of 2017. Now, these were crazy times. There's a lot of ICOs going on. A lot of other cryptocurrencies were doing really well. And there was a lot of signs that sentiment had gotten completely out of hand. So, for example, when it comes to the Grayscale Bitcoin Investment Trust, which many of you know as GBTC, this trust was actually trading. We know that it always trades at a premium above where Bitcoin itself trades, but Bitcoin topped out at around $20,000 per Bitcoin, and this trust was trading at 100% premium. So you were essentially paying $40,000 per Bitcoin plus obviously having to pay a 2% fee every year. So this is what happened. There was a big run up in 2017, a giant crash in 2018, and the market sort of bottomed at the end of 2018, very close to the time when the US stock market bottomed as well after a pretty rough 2018. Now it looks like we're making a new run here. A lot of people are suggesting we may be in another bubble and asking me to go into what happened in 2017. Now, the conventional wisdom was that futures were introduced, or I wouldn't say this is the conventional wisdom, but this is sort of the conspiracy theory version inside the Bitcoin community and outside, that what happened was the CME launched Bitcoin futures in December of 2017, and that somehow this enabled people to get short more easily. Before that, you couldn't really short Bitcoin. It was very difficult to borrow it and sell it short, and futures made that really easy, as well as the fact that perhaps the US government was not a huge fan of Bitcoin, and they were able to somehow manipulate the price of Bitcoin, as they've been accused of doing, and probably have been doing with the gold market using futures for a very long time. But I would suggest that while these factors may have played a part, especially the fact that it was easier to short Bitcoin, I don't think that the government, at least the US government, is manipulating Bitcoin at this point. If they are manipulating Bitcoin using futures, they're doing a really bad job because they have allowed it to peak back up. All they needed to do, if they could do it, is pin it down here at $3,000 or $4,000 per Bitcoin, have it stay down there forever. People would go crazy and gradually lose interest. But they haven't done that, and it looks like Bitcoin is actually out of control at this point again. And I think it's very likely we see new highs on Bitcoin later this year. So I think the conventional wisdom is only fractionally correct. I think what really happened with Bitcoin was much more driven by sort of it getting ahead of itself, combined with tightening from the Federal Reserve, the US central bank. So let's go into that. Basically, what happened is that starting in really 2015, early 2016, the Fed started raising interest rates. This is a chart of the Fed funds rate, the effective Fed funds rate, which is one measurement of where interest rates are, and this is set by the central bank. And you could see that for most of 2017, and then certainly in 2018, we had Fed funds really go from about 1.2% all the way up to 2.4%. And it turned out that this was too tight for the economy. There's a lot of debt in the US economy and the global financial system. And basically what happened is the Fed got too tight. They also tried to roll down their balance sheet. This is the central bank balance sheet, the Federal Reserve's balance sheet, where they basically print new money, they buy treasuries and munis and mortgage backs and things like that. Now they're buying junk bonds, and they stick them on their balance sheet. But we can see what happened is beginning really at the end of 2017 and early 2018, the Fed began to let assets roll off of its balance sheet. And the way they do this, if they're holding treasuries, for example, and the treasuries mature, they just let them mature and then they don't roll them into new treasuries, or they don't use the money to buy new treasuries. And so they were shrinking their balance sheet. They were raising interest rates. They were raising Fed funds. And this had the effect of causing a sort of mini bond bear market, etc. And it ended up making it very difficult for risk assets as well. We can see that for 2018, here's January 2018, the S&P really chopped around quite a bit. We had sort of the vol blow up in March of 2018. We managed to make new highs, and then the fourth quarter was really terrible for the S&P 500. We can see that there was a lot of tightening that the Fed was doing, and they were also sort of accelerating their balance sheet, the assets rolling off their balance sheet. So we really had a tightening of monetary conditions that affected not just Bitcoin, but also risk assets like the S&P 500. And what this combined with was Bitcoin getting ahead of itself. And one way to measure that is if we look at the stock to flow model. This was put out by Plan B on Twitter. If we look at this model, and here's a graphic representation, a historical chart, we can see that the big bubble was really the 2017 bubble was right here, where we got very far away from the blue line, which is right in the middle. The blue line is sort of the model price. It's the stock to flow smoothed over 463 days. I'm not sure exactly why they're using this particular number. You could use 360 days and get the same value. But basically what had happened is Bitcoin got way ahead of itself. This is why people were paying 100% over the 100% premium to own Bitcoin in retirement accounts. And so when you had the Fed being extra tight, obviously futures maybe played a part as well. But when you get so far away from the model price, or where it should be trading sort of under fair value, there's a tendency for it to fall back to the model's value, which is the blue line that's sort of obscured here. And then what often happens is you'll get an overshoot. And if you look at, I'll link to this chart, you can see that Bitcoin does spend time, especially right after its halvings. It usually has these run-ups, it overshoots on the upside, and then it mean reverts back down to the model price. And what happens is that first 12 to 18 months of the 4-year cycle, so 2016 to 2020 would be that would be a 4-year cycle. The halving happened, as we saw in July of 2016. You had this big run up at the end of 2016 and all of 2017. And then you had sort of 2 years of chop. And something similar seems to be playing out in 2020. We had the May halving in 2020, which really contributes to a shortage of supply of new Bitcoin because the miners aren't being rewarded with as many. And it looks like the price is now beginning to creep up again, though we can see that it's really sort of right on the model price here. It's right on the blue line. It's certainly nowhere in bubble territory as it was back here. And what's very interesting is if we look at this model, we can see we're right here, call it July 30th, 2020. The stock to flow price is 11,920, the model price, and we're currently at about 11,100. But you can see as the time progresses, the model price moves up quite sharply. Now, we don't know if this model will hold, but if it does, this suggests that Bitcoin, if it's going to be at the model price, should be trading at all-time new highs by the end of 2020. It should be around 25,000. And then this really just continues through 2021. And by this time, call it roughly this time next summer in 2021, maybe by September 2021 when school starts, you're very close to 99,000 or 100,000. So what I'm expecting is something similar to what happened back in 2017. I'm expecting the price to continue to appreciate. We'll probably get an overshoot as we did. The price will go way above the model price. And then we'll see what happens. There's a good chance that it does not mean revert in this case, simply because Plan B's model is around now. It was not around in 2017. And so there's a chance that especially institutional investors start to front run this model and price in the 2024 halving and the 2028 halving. The prices associated with each of those are roughly if I remember correctly, $300,000 or $400,000 per Bitcoin for the 2024 halving, and I believe it's $3 million for the 2028 halving. Now, obviously, Bitcoin can do what it wants. Models don't work forever. But this is what the model is suggesting. It's suggesting that we're certainly not in bubble territory here. We're right, kind of right where the, oops, I just destroyed the chart. We're right where the model suggests it should be. And we're about to enter into the most bullish 12 to 18 month period for Bitcoin. So that's where I think we are now. I'll link to this chart. Maybe you can do a better job of not screwing it up like I'm doing here. And you can check it out for yourself. But I think what's very different now is that we are in a point of sort of Fed monetary policy where they have interest rates at zero. They may go negative. In fact, we have the Fed growing its balance sheet really at an enormous rate, growing the money supply, growing the balance sheet from about 4 trillion to the high 6, almost 7 trillion at the peak, a little bit above 7 trillion at the peak. And so we have these very loose monetary conditions. The Fed is printing like mad. And I think this is very, very bullish for Bitcoin. And there will be people who had bad experiences back in 2017. And we'll remember what happened. And it's very unlikely that anyone except very hardcore Bitcoiners are still holding from this peak. Most of the people probably who didn't have high conviction and didn't really believe in Bitcoin capitulated. But what we do know is once we get to new highs here, once we get above 20K, anyone who's ever bought Bitcoin, anyone who's ever held it for whatever period of time will have a profit on their position, or they'll at least be break even. Anything above 20K, they'll have a profit. Obviously, these guys who are in bought Grayscale at 100% premium, they won't. But anyone who's holding the underlying Bitcoin will have a profit, at least on paper. And this is when the fireworks will really start. And presumably this is later this year, as that model price creeps up to around 25,000 and Bitcoin itself is drawn up to the model price, both by just the model price being a good mathematical representation of how these things work, as well as the needs of the Fed to just continue to print more money. They're going to have to continue to print more money. They're going to have to send out checks to everyone, additional unemployment benefits, especially going in an election year. It makes a lot of sense that the Fed will continue to print and have very loose monetary policy. This is one reason that gold and silver are behaving so well as sort of precious metals or monetary metals. And I think it's another reason that Bitcoin is really waking up here. Again, we're in the most bullish part of the cycle from now until December of 2021. So I'm long Bitcoin. I have a very large position in it, and I'm happy to be in Bitcoin. If you found this video helpful, let me know your questions, comments, and please hit that subscribe and like button if you found the video helpful. Thanks a lot for listening, and I'll see you in the next video.